can mention, Srishti, all eyes on the FMCG sector and what exactly is happening in that space?
Well, certainly, Cheryl, and that's what we're going to put the spotlight on in the Buy Now, Sell Now lens today, because the latest updates coming in from the FMCG space, but how is it impacting the whole space? Because there has been some changes in the custom duty, there has been some hikes, so let's understand all of that in detail, and Soumeet is standing by with the list of stocks that may get impacted because of these changes. Soumeet, over to you.
Well, the government of India has increased the custom duty on crude soybean, sunflower oil, palm oil from 0 to 20 odd %, and on refined oil the custom duty has been increased from 12.5 to 32.5% with effect from 14th of September. Now with this changes, the effective tax rate on crude oils stands at around 27.5% as against 5.5% earlier, and on refined oil it has been increased to around 37.5% versus 13.75% earlier rate that was. Now earlier the rates were reduced back in May 2022 to protect the consumers from the rising global commodity prices, and the reversal aims to address the issue where the domestic farmers are seeing continuous decline in the prices in the Indian market. Now India relies on palm oil imports to meet its 70% of the requirement. In first half, if you see, the palm oil imports increased by nearly 30 odd %, while the imports of this oil seeds increased by nearly 55% on a YOY basis. Now which are the categories that would get most impacted because of this? Now if you look at refined palm oil and specialty fats are the key raw materials for biscuit, noodles, snacks, chocolates, cakes, and crude palm oil and derivatives like palm oil fatty acids are used in soaps, laundry detergents, shampoos, and in cosmetics as well. So which are the companies that get most impacted because of this? Well, it's Britannia and Nestle, which have nearly 15 to 20% and 10 to 15% of the raw material cost which gets impacted because of this increase in custom duty, while for Godrej Consumer, Jyoti Labs and Hindustan Unilever, nearly 18 to 20% of the raw material basket prices are linked to this, which could get increased because of this increase in custom duties. Now companies would require to take a price hike to offset the impact, unless are expecting an impact on the gross margins of nearly 2 to 3%. So companies will need to take a price hike in similar range if they want to offset the impact. So these are broadly the companies that get most impacted because of these changes in the custom duties.
All right, thank you so much for that, actually, Soumeet, for outlining what it means for these FMCG companies, especially the custom duties changes that have come in for the oil segment. But let's put the question then to our experts to understand what should you do if you have an exposure in this particular segment, or if you want to take an exposure, then how this particular development will impact your strategy. We have Gaurang Shah who's joining us on the fundamentals. Gaurang Shah is joining us from GeoG Financial Services, while on the technicals we have Dhwani Patel, who's the founder of Finversify, who's joining us on the show. A very good morning to both of you. Thank you so much for joining us on ET9. And Gaurang, been a while, but what's been your take coming in on FMCG? Has it still been the same?
Well, thank you so much, Shari, for having me on the show, and morning to all of you all. Yes, it's been indeed a long time. Good to see you all again on the show. So as a brokerage house, Cheryl, we have been positive on the FMCG pack. And there are a couple of reasons why we have been positive, and we continue to remain positive. I definitely agree with what your colleague was just reporting about hike in duties with respect to certain oils that we import. But way back in 2022, the levels were different as far as pricing is concerned, and currently the levels are very different. So possibly government needed to rectify that. Having said that, India is, and India will always remain a consumption-driven story. A large part of this support for consumption comes in from semi-urban and rural India. With good monsoons and a better productivity in terms of agri crop, the income levels are going to improve to the next level. Along with that, you have the direct cash transfer benefits, which mitigates the slippages that used to happen earlier. Lower commodity prices, other than the input cost as far as certain oils are concerned, is one of the triggers that are positive in terms of top line and improvement in profit margin. Starting with HUL, ITC, Tata Consumer, Godrej Consumer, Dabur, Marico, Nestle, Britannia, we remain positive. And I think the support is going to be stable as far as metros, tier 2, tier 3 cities are concerned. But the great driving force for the earnings improvement is going to be from semi-urban and rural India. And I think whenever these kind of adjustments takes place in terms of duty hikes, the companies don't take the entire shock on themselves. They pass it on, some of it or a large part of it, to the end consumers like you and me.
All right, so that's the fundamental take coming in on the whole FMCG space, and Gaurang also shared some of the stocks that he likes at this point in time. But Dhwani, coming to you, a very good morning first of all, and what's your take coming in on the whole sector? Because we have seen the sector moving up on a positional basis, but given the news flow, there's indeed some negative reaction on a select counters. But at this point, any stock that stand out for you, as well as any stock where you would like to share your view, either buy or sell at this price point?
A very good morning to everyone, first of all. And talking about the entire FMCG pack as a whole, definitely the FMCG index has been seeing an upward rise. We are seeing that the momentum on the longer term charts is on the positive side over here. And specifically for me, the interesting part is the weekly charts over here. It's a parabolic rise that we see into this sector coming in at every point in time. From a technical point of view, also certain indicators that we note for are the momentum indicators, where it's indicating that the moment is on the positive side. ADX especially is rising from the bottom on the higher side. So definitely, yes, there are chances of putting your bets onto this particular sector right now, and certain positions must be made. Stock specific action, if you're talking about, I do see certain names which are on the radar for me right now. First of all, Marico is the one where I am eyeing on a breakout over here. The stock is nearing a breakout above its previous swing highs on the daily chart. So yes, Marico is also one of the stock that one should look out for. The breakout is almost over here at 700 levels, and once we get a breakout from those levels, we'll be seeing a upward tick coming in this particular counter of about 100 points from the same level. So 800 is what we should be watching out for next, and the stop loss on the lower side that one must maintain for these the position is going to be of 650. So it's a 50-point stop loss, 1:2 risk reward that falls into this counter. Then the next one that I'm eyeing over here is Dabur. Dabur also is nearing a breakout point where any movement that is there above 670, that is sustaining, we'll be seeing a short-term trade coming in over here first for a target of 700. Given 700 holds out, you can trail your stop loss and hold on into this counter. Stop loss that one needs to maintain currently for the position is going to be of 649.
All right, so that's the take coming in on the FMCG space, and that